We can maybe start with the fall in core earnings. You're affected by the fall in interest rates last year, of course, 500 basis points. That trimmed money from your net finance income. Also impairments and the reversal of tax assets. Take us through those, perhaps.
So I think as a whole, from our South African distribution side, we were actually quite strong. Despite the fact that for the 6 months we earned 44 million rand on interest, as opposed to 90 million rand for the same 6 months. We had an effect on RECA as well with the implementation of the RECA law from August of last year. The write-offs we had was 11 million rand for a call centre of ours in Bloemfontein, deferred tax for 5.5 million, and a certain technology called Imagine for 6.5, adding up to 22 million. So of course once off, and if you add it back to the core, really a 2 or 3% growth for the 6 months. So overall quite happy of our performance. Cash flow generated for the 6 months, 315 million rand. Our EBITDA up, our GP percentage grew, so as a whole really quite happy.
Mark, RECA, did you see customer numbers fall during the implementation of RECA? Will you get those customers back again?
We most certainly saw a big drop-off, consistent with what the network saw. What we cognizantly did was roll out a very aggressive RECA base. Currently we're sitting just under 6,500 of these registration points. Our target is to have 9,000 by May, our financial year end. So although we saw a decline, we're seeing a massive increase now. So I think everyone felt the pain in the beginning from RECA. Sure.
Brett, the South African distribution business still providing the vast bulk of earnings. International business picking up, though, growth of 139% over the period. Do you think you can maintain that sort of growth so we can see some momentum coming into this international business?
That's probably the most exciting part of our business at the moment. You know, for many years we've just consolidated loss from our international. We've seen a tremendous turnaround from our Indian and our Nigerian operation, and for the first time bringing in profits rather than bringing in losses. So we're really at the beginning of the hockey stick, so we should bear the fruits for many years to come from these operations.
India and Nigeria, exciting markets for you, of course, vast growth markets, aren't they?
Yeah, very exciting. As far as emerging markets go, India, we've been there for 7 years, and finally, as Brett said, the turn of the hockey stick. We EBITDA positive from November. We had forecasted December, so we're a little bit early, which is great. Nigeria, we're profitable from early in our start. So great opportunities, great markets, great emerging markets, quite low penetration levels, and the ability to vend all these other services and products we're doing. I think the future looks very interesting for us.
How about Mexico as a market for you?
Mexico, we start up. It's true greenfields. We've been there just under a year. We've deployed over 2,000 point of sale devices. We've integrated into multi-channel retailers. So yes, you know, as any greenfield start, there is a learning curve, but that's going on track. That's going on track to what we anticipate doing. By disinvesting out of the DRC and Mozambique, we're able to reallocate resources, competent resources around the world. So we primarily focused on the 4 main areas, being Mexico, Nigeria, South Africa and India, and we're very excited about those territories.
Of course, you have already exited Mozambique. You made 29 million rand from the sale of that business. You've now announced plans to exit the DRC as well. Why exiting those markets? Because DRC in particular, I'm sure, must be a vast market for you.
So Mozambique, first of all, was a good deal for us, a gross of 29 million, a net of 18 million rand. DRC, really, the choice between both of them wasn't really a money issue, but really allocating of resources. We found ourselves in a position where India, Mexico, South Africa and Nigeria really started to pick up, and we had a lack of resources to deploy into these countries. So we had to refocus.
Spread too thinly as well,
Sprint too thinly. We had to rather refocus, consolidate and concentrate heavily on it. And the plan's coming together nicely. For the first time in India, we have around 2 or 3 expats. In Nigeria, we have around 16 expats, and in Mexico currently 1, and hopefully building that up to 3 or 4. So really, where in the past we relied on our partners mainly entirely. Now we're going to obviously put all of our knowledge into those countries as well.
Mark, of course, we're sitting here waiting for that announcement from NERSA on the electricity tariff increases. Should be coming through shortly. You, of course, sell prepaid vouchers for electricity. What sort of impacts would a big rise have on your business?
Look, currently we vend, our vending business in electricity has grown, compounded growth over the years. I think where government or need to fulfill the needs of the people, hopefully it doesn't have a negative impact on the consumer. what we do is we recharge, or the ability to recharge those electricity users. So we anticipate quite a growth from traditional business. We're hoping that all these newcomers that come on board aren't scared away by doing illegal electricity vending. So from our side, we're still bullish about the electricity side.
And those increases in the prices that we're seeing, Brett, do you benefit from that? Do you charge percentage-wise on those prepaid vouchers?
Unfortunately not. We actually sell, besides a percentage of the actual turnover, we sell the wattage of which is being consumed. So the increase, the benefit will go directly to Eskom themselves. We will still do the same amount of wattage at the percentage. So we will benefit slightly, but not to the full degree of the 35%.
Mark, value-added services shrinking by 36% over the period. That's telemarketing of cellular and financial services products. Of course, due to the slowdown that we did see globally, it's a much smaller part of the business. Do you see that turning around as we see the economy starting to recover?
Look, when we started those businesses, it was to complement our core businesses. So we managed to maintain growth in our core businesses and feeding a lot of data into the non-core stuff. Our insurance businesses took a big hit. Global insurance companies took a write down and stopped paying big commissions, and that has had a negative impact. We are consciously trying to fix it, and we'll do whatever it takes to get it back on track.
Brett, we're almost halfway through the second half of your financial year. What are the prospects looking like at the moment, and any new developments, any new products you're going to be bringing to market?
So far a good start, meaning December and January. Obviously December being a really good month for us. We are expanding on our electricity product. We are launching 2 new variances to our electricity product in March and May, which in essence we're going to vend more municipalities, which will be very good. We are waiting for the launch of our money transfers domestically, which we think is a product which is as powerful as telecoms. So we try it on a new product quarterly, around 3 or 4 a year. Our distribution channel's already built, cost of it sunk into the telecom side. So obviously as we can add on new products, very beneficial for both us and the retailer.